Okay, so like when we look at Warren Buffett and his like incredible success, it's like you almost have to go back to the beginning, right? Like it's super fascinating how even as a kid he was just captivated by finance. Like who else is reading finance books and like tracking the stock market when they're just a kid? It's crazy. And don't forget to like this video and subscribe to our channel so you can follow along with us as we explore the financial world. What's really remarkable is how those early experiences really shaped his approach to investing, especially his focus on value investing, which is like the whole idea of buying stocks that are trading for less than their intrinsic value. It's kind of like finding these hidden treasures in the market, like companies that have this potential to like grow and flourish over time. And speaking of time, one of Buffett's like core principles is this power of long-term investing. He's not interested in like quick profits or chasing the latest market trends or anything like that. Instead, he really focuses on the underlying fundamentals of the company, those factors that determine its true worth. This intrinsic value, as he calls it, goes beyond just the current stock price. It's about really understanding a company's earnings potential, its competitive advantages, and its ability to generate value over the long haul. A classic example of this is his investment in Coca-Cola. He saw the enduring power of their brand, their global reach, and their ability to consistently deliver profits. He wasn't really fazed by like short-term market fluctuations because he believed in the company's long-term potential. And as we all know, the patience, it paid off big time. Coca-Cola became one of his most successful investments, demonstrating the incredible power of compounding growth over time. Think about it for a second. The longer you hold on to a valuable asset, the more it can appreciate in value. It's almost like, planting a tree and watching it grow into like this mighty oak. That's really the essence of Buffett's approach. He's not just like buying stocks, he's investing in businesses that have the potential to thrive for decades to come. But Buffett's not just like a buy and hold investor either. And he's also a master at navigating market cycles. And his approach is often like a contrarian. That famous quote, "Be fearful when others are greedy and greedy when others are fearful." That's like Buffett in a nutshell. He doesn't follow the crowd, he thinks independently and looks for opportunities where others just see risk. For example, during the financial crisis of 2008, when panic was gripping the markets and investors were selling off assets left and right, Buffett saw a golden opportunity. He recognized that fear was driving prices down and creating bargains for those who could just like keep a cool head. So he swooped in and invested heavily in companies like Goldman Sachs and General Electric. These bold moves, they paid off big time as the market eventually recovered. What's remarkable about Buffett's contrarian approach is that it's not just about being different for the sake of it. It's about having the courage to stick to your convictions, even when everyone else seems to be going in like the opposite direction. It's about recognizing that market downturns can present like unique buying opportunities if you're willing to be patient and wait for the storm to pass. This kind of brings us to another key aspect of Buffett's investment strategy, acquisitions. He's not just buying stocks, he's building a business empire by acquiring entire companies. And he's incredibly selective about which companies he brings into the Berkshire Hathaway fold. He looks for businesses with durable competitive advantages, what he calls moats, things that protect a company from competition and allow it to maintain its profitability over the long term. Think about companies like See's Candies with their loyal customer base and iconic brand, or Geico with its low-cost insurance model. These are the kinds of businesses Buffett gravitates toward, companies with a strong foundation for long-term growth and success. But it's not just about the numbers either. Buffett is also a firm believer in the importance of strong management teams. He wants to work with people he trusts, people who share his values and his long-term vision. He understands that the success of any business ultimately depends on the people who run it. So we've covered a lot of ground already: value investing, long-term thinking, a contrarian mindset, and a focus on acquisitions. But there's another crucial element to Buffett's success that we can't overlook: his like unwavering discipline. In a world of instant gratification and short-term thinking, Buffett stands out as like a beacon of patience and perseverance. He doesn't get swayed by market hype or the latest fads. He sticks to his principles, does his research, and makes calculated decisions based on a long-term perspective. This discipline is evident in his investment approach, his acquisition strategy, and even his personal life. It's this unwavering commitment to his principles that has allowed him to build a fortune and achieve a level of success that few investors ever dream of. So what can we learn from Warren Buffett's journey? Quite a lot, actually. His story is a reminder that success in investing and in life isn't about quick fixes or get-rich-quick schemes. It's about having a solid foundation, a clear vision, and the discipline to stick to your plan even when things get tough. It's about focusing on the long term, being patient, and making smart decisions that will pay off over time. And it's about never stopping learning and growing. Think about it this way: Buffett is still learning and evolving even in his 90s. He's constantly reading, thinking, and adapting to new information. And that's what makes him such a remarkable investor and role model. I think one of the most important important lessons that we can really take away from Buffett's success is the value of thorough research, right? He doesn't just jump into investments blindly or anything like that. He really digs deep into a company's financials, understands its industry, and really analyzes its competitive landscape. He's almost like a detective piecing together all these clues to uncover a company's true potential. And that's a lesson we can all kind of apply to our own investment decisions too, right? Like before putting your hard-earned money into any stock, I think it's crucial to take the time to understand the business, its management, and its prospects for future growth. And this brings us to another crucial aspect of Buffett's philosophy that often gets overlooked. It's his understanding of market psychology. He's not just analyzing balance sheets and income statements. He's also a really keen observer of human behavior. He knows that markets are driven by emotions, like fear and greed. And these emotions can lead to, sometimes irrational decisions, right? This insight is what allows him to stay calm and collected when others are totally panicking, and to capitalize on opportunities that others might miss. Think about it this way. When everyone's rushing to sell, prices often drop below a company's true worth. That's when Buffett steps in, ready to buy those undervalued assets. He sees market downturns as a chance to stock up on great companies at bargain prices, a strategy that has served him well over the years. It's almost like shopping at a clearance sale. You find amazing deals because everyone else is too busy worrying about the short-term outlook. And this ties back to his emphasis on patience and long-term thinking too. He doesn't get rattled by short-term market fluctuations because he's so focused on the big picture. He knows that over time, the market tends to reward companies with solid fundamentals and strong management teams. It's this long-term perspective that has allowed him to ride out market storms and come out even stronger on the other side. So what does all this mean for the everyday investor? Well, it's a reminder that investing isn't just about picking stocks or chasing quick profits. It's about developing a sound investment strategy, understanding the companies you invest in, and having the discipline to stick to your plan. It's about being patient, being contrarian, and staying focused on the long term. And it's about learning from the best you know. Warren Buffett's journey is a testament to the power of these principles. By adopting his approach and applying it to our own investment decisions, we can all increase our chances of achieving long-term financial success. But you might be thinking, that's great advice, but I'm not Warren Buffett. I don't have millions of dollars to invest. And that's okay. The beauty of Buffett's philosophy is that it's scalable. It can be applied to any portfolio, large or small. What's important is to grasp the underlying principles, thorough research, long-term thinking, a contrarian mindset, and unwavering discipline. By embracing these principles, you can start building a solid foundation for your financial future, regardless of your current investment capital. It's about making smart choices, staying informed, and letting the power of compounding work its magic over time. And, it's really interesting to see that Buffett understands that the world of investing is constantly changing, right? He's like this voracious reader, always on the lookout for new knowledge and insights. He doesn't just rest on his laurels or anything. He's constantly learning and adapting to new market conditions and emerging trends. This commitment to lifelong learning is so crucial for any investor. The market's a dynamic beast, and to succeed, you really got to stay ahead of the curve. Read books, articles, financial reports, attend conferences and webinars, engage with other investors and experts. It's just never stop seeking knowledge and expanding your understanding of the financial world. Remember, the more you learn, the better equipped you'll be to make those informed investment decisions and navigate the complexities of the market. And beyond just the financial aspect, there's another side to Warren Buffett that I think is worth mentioning. He's not just an incredibly successful investor, he's also a philanthropist who really believes in giving back to society. He's pledged to donate the majority of his wealth to charitable causes. It's like setting an example for others to use their success to make a positive impact on the world. This commitment to philanthropy really speaks to Buffett's character and values. It's a reminder that true success isn't just about accumulating wealth, but also about using that wealth to make a difference in the lives of others. It's about leaving a legacy that extends beyond just financial gains. So as we wrap up this deep dive into the world of Warren Buffett, it's clear that his journey offers invaluable lessons for all of us, right? Whether you're a seasoned investor or just starting out, his principles of value investing, long-term thinking, and disciplined decision-making can really guide you on your path to financial success. And his example of philanthropy, it reminds us that true wealth isn't just about money. It's about making a positive impact on the world around us. If you found this exploration of Warren Buffett's investment philosophy insightful, be sure to like this video and subscribe to our channel for more in-depth dives into the world of finance and investing. We're here to help you navigate the complexities of the market and achieve your financial goals.